trading year is winding down and it's almost time for a holiday break, but not just yet. We have one of the biggest trading weeks this year. Are you ready for 2022's last dance? If so, you've come to the right place. Hello, I'm Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for the 12th to the 16th of December 2022. Many times we've had to look hard for market movers and key events, especially this month. Not this week. A collection of CPI numbers and central bank announcements promises to drive heavy participation from Tuesday all the way through to Friday. One thing is for certain, the markets are going to be ripe with opportunity. So let's dig into those week's market movers and shakers with our analyst, Nick Quinn.
Monday starts with a lot of data out of the UK. We've got GDP figures month on month and year on year, as well as industrial production and manufacturing data as well. GDP is obviously going to be the leader in that pack. I would note specifically on the month on month that we've had a couple of months of negative growth printed on GDP in the UK. So as a result, I would focus pretty much on the FTSE on Monday. Now, we have had, since we've had the dislocation of the gilt market a couple of months ago, we have had somewhat of a relief rally in the FTSE, but for me, I would not necessarily be fooled by that. We have had a false break now on the daily of this pennant here, and that is good to see in the sense that, you know, we've got a very clear line in the sand, this trend line here dating all the way back to February this year, really containing price action at the moment. So I would be looking for downside action on the FTSE from here. As to how that plays out remains to be seen, but I would certainly look to be certainly getting back down to these lows around about 73.50, something like that, on anything that is negative for the GDP figures feeding into UK data for this week. Tuesday, the focus is all going to be on the United States, and ironically, despite all the interest rate decisions we've got on Wednesday and Thursday, I actually think that Tuesday is going to be the most important day. It's the CPI data out of the United States, which has really got a lot of potential to cause a lot of market volatility, and it's the unknown factor of that I think potentially puts a lot of the market at risk. With the central banks and the interest rate policies, a lot of it is already either baked into the cake or has been very clearly signposted, but we don't necessarily get that understanding with CPI data. If you just quickly look at this here, you can see that downtick in core CPI 6.3 last time out in November. Now let me just show you specifically what how that worked on the dollar. You can see here the move that we had, the dovish move, as CPI sort of reined back in, and we had a massive down move on the dollar here on the 10th of November. Now from here, I think this is where we could maybe, if we do get some big volatility during the week, it's going to be on Tuesday, and it's going to be the surprise factor. We don't actually know what the reaction is going to be from CPI to all of the interest rates that we've had. Clearly, the Federal Reserve is looking for some kind of a leveling, but if we did get a meaningful surprise to the downside or upside, I expect the dollar to move and to want to price that in very quickly. If we did get an inline number or a negative number in CPI, I personally would think that we'd get further downside in the dollar from here. We have just tagged this support area here back in the end of April this year. That has now tested successfully. If we were to get a move lower from here, that would open up some potential trade back down to 102 area, potentially as low as that, further unwinding this carry trade that we've had in the dollar. But if, for example, we did get an uptick in CPI, which was a surprise, expect more money to flood into the dollar and the demand for the dollar to be quite high. As a result of that, you can see we're just starting to form some kind of a channel on the daily chart here. But I would think that certainly any uptick in CPI would flood the dollar market, and we would see a great demand for dollars, and then from there we would be looking for quite a seismic rally, which would act as a short squeeze for shorts that are now currently in this market. Wednesday is all about the Federal Reserve, the FOMC meeting, and the press conference comes off the back of the interest rate decision, where we are looking for 50 basis points to be added to the United States interest rates for the end of 2023. Now, this tool that you can see here is very, very useful tool put together by the CME. This is the Fed Watch tool, and this is measuring the interest rate traders, the Fed Fund futures positioning that the interest rate traders are engaged in. And you can see here what this is showing us in the two columns. It's showing us that most of those guys think that there's just under an 80% chance of the Federal Reserve hiking around about 50 basis points, and only 21% think that there's a chance of a 75 basis point hike. Now, when we actually look at the charts themselves, I'm going to focus on the Nasdaq on this chart. If we get a 50 basis point hike, it's very easy to think that it doesn't really have much meaning. It's big off the back of the aggressive interest rate hikes that we've had this year. But don't forget, that is a 50 basis point hike, so it's still quite a seismic increase in interest rates. So I would be expecting more downside potential in the US indices, and so I would be looking to play the weakest of those to the downside, which would be the Nasdaq. Now, I've drawn the broadening top pattern. This is a 1 hour chart, the broadening top pattern that we've currently got forming on the Nasdaq. What that's showing us is it's showing the market starting to thin out towards the end of the year. So a lot of volatility could potentially be on a market like this. Now, the dotted line here that you see is a 50% distance, is a halfway distance of the initial swing that started the broadening pattern off in the first place. So for me, at this late stage of a pattern like that, I would be very, very much looking to use that as my line in the sand. I would be looking to short this market in some way, finding a support, finding a resistance level to come off, and then I would be looking to this 11,780 area, this 50% distance. That would be the area that if I was short, I wouldn't want to be holding any short positions out of the money if we get a meaningful close on Wednesday above that level. And we're probably only going to get that if we get some kind of a massive shift from Jerome Powell. Personally, I can't see it. I think we are certainly looking towards the downside for the US indices off the back of that interest rate announcement. Thursday is going to be the busiest day of the week. We've got 3 central banks hiking rates within a very short space of time. The Swiss National Bank, the Bank of England, and the European Central Bank as well. We're going to cover the whole thing in a lot of detail in the trading room, but for now, I just want to focus on the SNB, on the Swiss National Bank. You can see here on this chart here that the inflation rate in Switzerland has started to level off at 3%. The SNB hiked 50 basis points in June and then 75 in September. The market is currently looking for a 50 basis point hike from the SNB. Now, they have a target rate of 0 to 2%, and the question is inflation is still a little too high for them, so presumably that the 50 basis point hike that we get from them will be what they consider to be just enough to put a clamp on that inflation rate. When it comes to it from a trading point of view, a lot of people will always focus the Swiss franc against the euro. The US dollar is popular as well, but the euro, from the trade ties and the geographical relationship that Switzerland has with Europe, it always puts a lot of emphasis on the euro against the Swiss franc. You can see here that we have that parity level just a little higher than the swing low created in March. Now, you can see over the last couple of months we've been threatening, as there's been a little bit of an uptick in the euro and just a little bit of weakness in the Swiss franc. You can see that we've been threatening to get above that swing low to push towards parity. Is that going to happen on Thursday? Well, that remains to be seen, but I certainly think that the Swiss National Bank, they are certainly not looking for continued weakness in the Swiss franc itself because of the added pressure that puts on importing inflation, and that's not something that they want until they've got inflation well and truly tamed. So I personally think that we will potentially get some more Swiss franc strength off the back of that interest rate announcement, and that is the support area that I currently got. You can see this is back from the beginning of October. We've already made a decent attempt to test the bottom of it. We've didn't quite get there, but that definitely does open the door for a move back down to 0.97, those 97 areas. If we did get any Swiss franc weakness off the back of that, then I suspect that would be a move that would push past this swing low, and then we would be looking to maybe potentially close the year above parity against the euro, which would be a very meaningful end to a very interesting trading year for the Swiss franc. We end the week with more inflation data, this time out of Europe, together with balance of trade figures. Now, I just draw your attention to the core inflation rate is expected to come in at 5% in line, but the month-on-month which was previously 1.5%, we have had a marked step lower, so that's the one that I would want to watch. Now, if we did get a step down in inflation, that would be bullish for stocks. That would be a dovish reaction that we would be expecting from the market. And as a result of that, I'm quite interested in the Euro Next 100. This is the biggest blue chip companies that trade on Euronext. So it's a big deal. It's a big game changer. And I really like the way that we've taken out this high here from the 16th of August. We just tried several times to skew into this resistance area from the beginning of the year back in January. If we did get a dovish print in CPI and the inflation data on Friday, that does potentially open up a rally, which would then start to bring into focus the top area of this resistance here, with this doji potentially being a real target for the market, coming in at around about 1,319. So that is a potential very interesting market to end the week with.
The coming week on the economic calendar is truly unique. Not only do we have US and EU CPI reports scheduled, but 4 central bank interest rate decisions are also due to take place. And in recent memory, it's a challenge for me to remember such a unique lineup of events. Wednesday and Thursday are going to be the key periods for me in the markets, but we'll be with you every single step of the way with live coverage across all of the vital events. We're now firmly in the home stretch of 2022, and after this Friday's bell, many institutional participants will head home for their holidays, and in many ways, the next 5 days are the storm before the calm. Be sure to check into the trading room throughout the trading week. We will have live analysis, trade ideas, and everything you need to know about this crucial period in finance. And until then, trade well, and we'll see you on our next live stream.